I'm Nate Lind, and I help people interested in buying or selling online businesses get the transaction done without the deal falling apart. If you're looking to buy or sell online businesses, then be sure to keep tuning in for more videos like this one. Be sure to subscribe and hit the bell for notifications about new videos and interviews. And introduce yourself in the comments. Are you a buyer or a seller? Enjoy the interview. Hey everybody, Nate Lind here. I've got another Nate on today, Nate Jackson. Nate is a professional acquirer of businesses. He's with Perch. Nate, tell us a little bit about yourself and tell us a little bit about Perch.
Yeah, great. So Nate Jackson, had a varied path on my way to e-commerce. Started my career as a mechanical engineer, actually working on nuclear power plants for the Navy. Did that for a while, went on to business school, and ultimately went into the path of management consulting. So worked with Bain & Company here in Boston, which is where I'm based now. Did that for about 6 years and did a lot of M&A work, a lot of work with private equity companies that were considering making major acquisitions. And through all that, found a lot of energy from the deal-making environment, but was excited to do something a bit more entrepreneurial. Really when a mentor of mine, Chris Bell, reached out with the opportunity at Perch, which was building and acquiring a portfolio of Amazon FBA brands. I found it really exciting, really something that was right up my alley of sort of connecting the M&A experience with a lot of the work I'd done, working with retailers, with CPG companies that were all worried about Amazon and seeing the onslaught of the marketplace and the onslaught of Amazon on the whole. And so over the course of the past year, joined up here to run acquisitions. It's been really fun diving in, moving at a pretty quick pace to buy as many as a couple of brands a month at a time. And yeah, we're, at Perch, the goal here is to be building a platform that can acquire, integrate, operate a large number of Amazon FBA brands at scale. The founder was, again, my mentor, Chris Bell, was most recently at Wayfair. He had built out a bunch of their supply chain network, so the Wayfair delivery network, and had been exposed to sort of e-commerce at the broadest levels through Wayfair, and had come there from Bain, where he'd done a bunch of diligence work, and really just saw the opportunity to bring together some e-commerce expertise and scale advantage tied together with the ability, hopefully, to make some really smart acquisitions and sort of make the right decisions there, and really just take a business from somebody that may have been running it by themselves or with one other partner, and apply some resources on supply chain, apply resources on technology and on ad spend to really focus on optimizing each step of the process versus one person trying to do it all. So it's been a lot of fun. We're off to the races. We've got a number of brands that we've acquired and are continually adding to that each month. And so it's been a bunch of fun.
That's awesome. I appreciate you sharing some background, giving us a little bit of context as to what we're getting ready to jump into. And we talked a little bit, prior to this about the transitioning of businesses. And I've gotten some entrepreneurs that have gotten to the point where they've been thinking about jumping in and acquiring multiple businesses. And many of them are curious about, what does it look like to transfer somebody else's business into your business? So I'm curious, how do you go about that transition part? How do you transition a business into your ownership once it's closed?
Yeah, it's a good question. And, the market is young enough that the vast majority of FBA brands that are out there have never changed hands. They've just, were built from the ground up, whether it be 2012, 13, 14, at the oldest, as recent as a couple of years ago. So a lot of people are navigating this for the first time. Most people that are selling their business here are doing it for the first time. Sometimes the buyer is doing it for the first time. And in general, I think a deal, when you're approaching this transition process, it's super important, right? So you could structure the best terms, you can structure a great deal for both parties, but if you can't effectively transition the asset and the deal never actually gets consummated, then it was all for naught. And so, there is a process in place. It is doable. Lots of people are buying and selling these businesses, but it's a fairly high stakes part of the process that you need to be thoughtful about ahead of time. And in general, I would say, we have try to take a standard and cookie cutter approach to the account migration process, even if the transition process more broadly needs to be more ad hoc, depending on what a seller is willing to sign up for in terms of their transition arrangement. You asked the question about sort of what does it take to actually migrate the accounts, right? And so I can dive into that a little bit. The key thing is that you go from the day of close, where the seller owns the account. It's their legal entity or their name on the account. They're running the day-to-day operations, and you're not. To someday in the future where the buyer is. And really the way to do that after close is it takes a little bit of time, and the name of the game is communicating with Amazon to make sure that they view this all on the up and up. If you think about it, you're going into an account, changing banking deposit methods, changing legal entities, changing two-factor authentication. And so the biggest mistake someone can make is not communicating with Amazon about what's happening and getting bots that shut the account down. So really the approach is mostly just to communicate to Amazon upfront about what's happening, let them know that this transition is happening. And then once you get approval to do that, you've got to have all your key contact information lined up. And basically you go from there to work hand in hand with the buyer and seller to work hand in hand to load in that new legal entity name, load in your banking information, make sure that you're cut over to have the communication preferences for everything, so that if something goes out of stock, that you're getting that notification. If somebody files a complaint, that you're getting that notification. And so it's really about communicating with Amazon. Once you get approval, making all those changes all at once, and going from there. On the account details, I think the one other big thing that some people will miss if they're not doing it for the first time potentially, or if they're doing it for the first time potentially, is just the sensitivity Amazon has around what data is used. So of course you can't have the same email address that's associated with another seller account. Generally speaking, you shouldn't have the same legal entity. Amazon has communicated some things about maybe being more open to that, but generally speaking, probably cleanest to have a new legal entity and of course new and clean banking information as well. But the key watch outs I would say are, make sure you over communicate with Amazon and make sure you're really airtight on the information that you're adding to the account.
How early in the process should buyers and sellers be, looking ahead to this, planning for this? Is it something you start the communication process before the closing? Do you start this after the closing? And the second part of that, what's the best method to communicate to Amazon? Do you do it within, Amazon's system? Is there an offline like email, escalated email like that you guys use, or do you have a personal contact that you guys use? Maybe some nuts and bolts there would be interesting.
Yeah, sure. So on when you should start talking about this between buyer and seller, I would say if you're not talking about it in any detail, or even at high level at the stage of the LOI, that's a mistake. Just because by the time you're closing, you need to be sort of hitting the ground running with a plan in place. And so my strong recommendation is that, in your LOI, you're talking with some degree of clarity. It doesn't have to be, all the details about, what a transition looks like, what the plan is for which accounts you're taking over and operating. One thing that could go overlooked, if you're buying a business that has a US account and a Europe account, and you don't have a European account or European legal entity, it can take months and months and months to actually transfer a European account or to set up your own and get the proper VAT registration. And so, if that's not something that comes out until the day that you're trying to sign, that's going to be a huge problem, right? Because you probably don't want to clear escrow until that's done. And likewise, they don't want to give you the full control until they clear escrow. And so in situations like that, you might need to have two separate APAs, for example. And so all that to say that you need to be talking about this from early on about what your plans are, because that should be something that everybody's on the same page on. Your second question, Nate, was on sort of nuts and bolts of how you communicate with Amazon. So there are a number of means, all of which don't feel like the perfect solution, but generally speaking, registering a case with seller support is the fastest path to an answer. Sometimes emailing seller performance might help you get a slightly different access. If you talk to different people, they're doing different things and oftentimes getting to the same result. And so, I would say registering a case with seller support generally will get you the fastest response, and they will sometimes let you know if what you're asking them for approval, doesn't come through them and needs to go through seller performance. But generally speaking, my advice would be to start there. There will be times if you do enough of these that something comes up that was unanticipated where, you get, the bots trip on something and you get something frozen. Generally speaking, if you can get somebody on the phone, that's most important. And if you go through the contact us path, you can often get somebody on the phone. And even if they don't have the the path forward. I think it's helpful for somebody at Amazon to be hearing you and hearing that you're approaching things on the up and up, and just registering that you're trying to be overly communicative. I think they want to do the right thing, but they're just dealing with millions of accounts, and so they're they just have to err on the side of caution with their bots and what they're seeing.
What are some of the biggest mistakes that people make when they're going through this migration?
Yeah, I would say some of what we've talked about already. One is just not having a transition plan at the start of the process. So again, miscommunicating on that, or just not having the right execution plan is a death knell, or could really lead to a frustrated way that the deal could break apart if you just had a fundamental misunderstanding of how that would play out. Two, I would say, the communication piece, like definitely over communicate between buyer and seller and with Amazon. Three, I would say, is honestly biting off more than you can chew. So if you have never done this before, and the third party, the seller that you're working with or the buyer that you're working with has never done this before, that's a recipe for disaster. So typically, if you're working with a broker, they'll be able to guide you through that process, as I'm sure you have and can. Sometimes a buyer and seller may work together, and if one of them has done it before and can guide you through, and you've got a trusting relationship, that can work. I would frankly never advise somebody to try it on their own if neither party and there's no broker that can help them facilitate that, honestly. And then, and I think the other thing there that we haven't talked about is really just like, at the end of the day, both parties are going to need to really trust each other. And so taking the time in the deal process to build rapport and build trust and understand each other well will go a long way when something inevitably goes sideways and you need to work together, get on the phone at inconvenient time zones to get with Amazon. I think neglecting the relationship building along the process, because you will need to trust each other and work with each other as partners throughout this process for probably a little bit longer than you'd like to.
Absolutely. Well, Nate, what's at stake if this process is bundled? Like if this is messed up, what's the stakes that play out here?
I mean, they're pretty big if you think about it, right? I think best case scenario, you transition the accounts, the seller can go off into the sunset, and you can run this business profitably for years to come. That's one scenario. I think a realistically bad scenario is that you make the transition, something comes up in the account verification process down the path, and your account goes on hold for a few days, which, depending on how quickly you can break free from that, it could be a week. If you're doing something wrong, even if it's all in the up and up, you can definitely get your account locked when you're doing all these changes at once. And depending on the scale of the business, that's potentially tens of thousands of dollars of profit on the line. That is one scenario. Another scenario is that, if you're going through this process and you just can never successfully migrate the assets, say your legal entity doesn't have the right to sell in Europe and you can't get through there. I've heard of deals that have fallen apart after the signing of the APA because the account could not be migrated. Anybody who's bought or sold a business before knows how much pain went up into the point of getting an APA signed. And so the last thing you want is to have, 30, 45, 60 days of effort fall apart just because there's something that you weren't either looking ahead to or that you bungled in the transition process that leads you to not actually get to take control of the asset, for one, and not get paid as the seller, as it, whichever side of that you're on. So that's not something anybody wants.
Definitely not. Nate, what's COVID done to impact account migrations? Has there been any changes in the first half of 2020?
A good question. What hasn't COVID impacted? It's less than you might think, but it is still real. In the US, it's more or less stabilized now, and the migrations we're doing today are similar to what we were doing back in February. In Europe, it's still substantially impacted. And that is not on the, account credential process, transition. What I probably didn't talk about yet is that, in Europe, the two paths you could go, one would be that you're buying and taking control of their European account, which up until I think a couple of months ago, you actually couldn't transfer Amazon accounts in Europe, and now you can. But what you might not know is that, as I said earlier, it takes 3 or 4 months to fully transfer them. So you could go that route. If you're not going that route, there's often what you call a listings transfer, where you're not taking control of their account, but you've got another European account that you can then bring the listings into. And that's honestly the process that we are generally doing. But the challenge now with COVID is that because of all of the log jams in fulfillment centers, if you're trying to sell a new product that you haven't sold before, Amazon is going to say that you can inbound stuff, but 50 units. You can inbound 50 units. If you just bought a brand that's selling 10,000 units of a SKU a month, that obviously is going to do nothing for you. And so you have kind of the stalemate right now where you might go through a transaction, you've got your legal entity and your account set up and ready to go, but you can't practically actually inbound product yet in any meaningful way. And so what I think you have a lot of buyers and sellers doing right now is continuing to operate from the seller's European seller central account, even if you control the US account. And basically, selling through that inventory that sits in the account, in the seller's European account, even if you haven't taken it over, haven't changed the banking information, until, knock on wood, we get into a world where Amazon will say, yes, you can inbound more than 50 products that you haven't sold before. We expect that will come through at some point, but again, this is something that you just want to be communicating openly with each other about, because this partnership needs to go on for several months as you're sort of co-managing an account before you can actually move stuff over. But the main impact is again on inbound restrictions.
And how has COVID impacted your deal making more broadly? What challenges and troubles or other experiences are you guys having right now?
Yeah, it's interesting. It seems like it changes every couple of weeks. So we've seen the whiplash of everyone feeling like the world was falling apart to everyone in e-commerce feeling like either, yes, their brand had fallen apart or it was the best thing that ever happened to them. And so I think you just see this, it's a world of winners and losers within our own portfolio. I think thankfully we've had mostly a really positive impact of everyone moving to e-com. We've had some products that were impacted really hard in March, but then sort of as activity's gotten back to normal, it's stabilizing. But overall, I think, the deals are still happening. There's still buyers in the market. I think you've seen a lot of types of buyers that may have been, using a 401k, for example, pulling back, but an institutional buyer that is funded is still in the market for deals. I think the biggest thing is that we're going to see a sort of increasing presence of revenue earnouts. And I say that because, you'll have a buyer that is looking at a situation and saying, surely sales won't be up 60% forever. Or like, at least this is not the new normal. And a seller, of course, will say, of course it will. And likewise, if a brand is struggling, a seller might say, surely my sales won't have declined forever. And a buyer will say, I'm not so sure. The way to resolve that is to get, some portion of the deal that is contingent on how things play out over the next 12 months. The reality is none of us know exactly how that will play out. And I think, deal structures that will prevail in this market will be ones that adequately link the risk profile of a buyer and a seller to say, hey, if we're both saying we believe slightly different things about what may play out, so let's build a structure that will have us both be happy if it plays out, if it plays out in a given way.
So you've been at this long enough. You've probably got a war story that you think about from time to time. It's either a deal that got away, or one that fell apart, or one that just barely got it across the finish line. Share a story with us. I think that'd be a fascinating case study. And then afterwards, let's pick apart some learning lessons from it.
Yeah, I would say the thing that is a traumatic memory comes to mind when you trigger this. So sorry, I don't have a positive one, but yeah.
No, that's fine. Great learning lessons come from challenges and failure. We can go anywhere you want to with this. I've literally bankrupted businesses and exited businesses. So anywhere in between, yes, I'm all for.
Yeah. So the deal that comes to mind is, it was a great business, a brand we really liked, got along really well with the seller and with the broker, and everything was going great. And this was one of my early transactions. So I'm dramatically wiser now. It resulted in me losing all of my hair, but it was worthwhile for the learning. Basically, again, we went through the full diligence process, got a transition plan. We were already doing production planning for the sort of the next stages. When somebody raised a question about VAT. So this had a meaningful, probably 40% of its sales were in Europe.
Wait. Let's get the stakes. Like, how big is this? 6 figures, 7 figure, 8 figures? What's the scope of this?
Seven figure business, 7 figure plus a 7 figure deal, well into the 7 figures.
Okay.
So it was a big deal, really great with our portfolio. And basically, the way that I had looked at past deals and sort of understood that VAT was flowing through the financials was one, this is going to get really boring real fast if I go too far into the details, because it's related to Amazon's handling of value-added tax in various municipalities and countries. But headline is, I had one understanding of the way that VAT was handled, thinking that what the revenue line I was looking at from the transaction reports was net of VAT. So the customers charged £10. That means that we got £8 that shows up in revenue, and £2 was set aside to be paid into VAT. Because that's the way that a number of deals I had looked at in the past had been. A few days before close, again, a lot of blood, sweat, and tears and lost hair had gone into the deal at this point, and come to realize, like, hey, actually, it's only as of the last month or so that this business has been getting net pricing in their transaction reports. Prior to that, it was always gross. And so basically all of the European revenue is overstated by 20% plus, by no fault, no misrepresentation of the seller or anything like that. It was just like literally a change in the way that Amazon's transaction reports handled, or however they handled that in that setup. And so basically realized there's a couple $100,000 that is a cost that was not in the P&L that I was building, that we were all looking at. And so it just, dramatically changes the perspective of value. And therefore the seller was anchored on one thing, and there was kind of there was no love lost there, but it was the sort of thing where, they didn't want to go through with it. We didn't want to go through with it as is. And so we had to sort of, shake hands and walk away. And now, anybody that works with me knows that one of the first questions I ask as we get into diligence is, can I see your VAT transaction reports and how they're handled? Tell me all about it, because it's the sort of thing that you just want to get to the bottom of sooner than later. And subsequently, we have had deals where somebody realized, oh, my P&L was missing $100,000 of costs, but I get it, and yes, that's going to be true no matter who buys my business. So let's adjust accordingly. But it's just important to get there on day one and not day 34.
This is a good learning lesson for those of you that don't have an e-commerce specific bookkeeper or accountant or fractional CFO, person you can rely on, because this doesn't happen only with VAT. This happens with a number of shopping cart systems and payment processing systems, because they're batching stuff through their payment gateways, and sometimes reserves get held, and then reserves aren't accounted for properly. A lot of merchants aren't counting reserves as sales. They hold that aside because they don't want to get taxed on money they haven't received. But if you're doing accrual accounting and you follow the IRS's guidelines, you have to account for those reserves as sales and be taxed on it. I have a personal friend that got audited by the IRS, and the rules are quite. I'd still argue about this with all sorts of people, but at least what this individual encountered was he got audited. It cost him a couple $100,000 because he wasn't properly accounting all of his revenue, his sales revenue, as sales revenue, even though 10% or 5% or whatever it was being held in a reserve account at the payment processor level. This is off Amazon sales. So this stuff gets really tricky, and it's really easy to make an assumption and go with that. And then when you get into due diligence in the transaction, that I can totally see how easy that would be to miss until the last minute.
Yeah, that's absolutely right. And I think no matter what deal you do, I think every seller in the diligence process is going to find out that they were making more money or less money than they thought they were, just because there's as you're saying, there's so much that goes into the flows of these businesses. And as most people that we're working with are one or two people that can't be or don't want to be as in depth on various accounting details. And so, you're focused on growing your business, you're focused on a high level strategy. And some of this stuff is going to come through. And that's, again, where you need to just make sure that buyer and seller are building rapport and a trusting relationship where it's not like a game of gotcha. It's mostly like, let's just make sure we're looking at the facts in a way that is coherent and makes sense.
Absolutely. Nate, that is a great war story, a really big mine for people to avoid stepping on. So
ask about that.
Yes, ask about VAT, ask about reserves, like follow the money trail. From wherever when it leaves the consumer's credit card, every entity you've got access to that it touches, look at it, get that transaction report, because man,
Totally.
money just disappears, into fees and reserve accounts and tax accounts and other stuff. And that all has to be accounted for.
Totally.
Thanks for watching. If you liked this video, be sure to subscribe and tell me what you thought about it in the comments. Your comments encourage me to continue posting videos, and they give me ideas about what to post next. I read and reply to every single one. Also, if you own an online business and you're curious of how much it's worth, click the link below to get a free business valuation with a member of our team. Who knows? It may even be me you're talking to.